Well, good morning, everyone, and thank you for joining me for Moo Moo's The Daily. And today we've got a lot to talk about because there was plenty of action in overnight trading. Now, after a couple of days of calmness, or eerie calmness perhaps, we saw action resume in trading overnight. And although the European markets were fairly quiet and modestly positive, a speech from the Federal Reserve Chairman Jerome Powell really changed the outlook for markets. And we saw a very severe reaction in US trading, the Nasdaq down by more than 3%, the S&P 500 down by 2.25%, and the formerly glamorous tech stocks led the charge. Software stocks, in particular chip stocks, were under real pressure, and consumer exposures, consumer electronics, for example, under severe pressure in trading overnight. And a lot of it had to do with the commentary from Jerome Powell, and in particular, his response to questions around whether or not there is a Fed put under the market. The biggest and longest bull market in modern history was sustained in part, at least, by a belief amongst investors that if things went badly wrong, the US Federal Reserve would step in and lower interest rates and flood the world with money to help support markets. In the speech last night, when directly asked the question, Mr. Powell denied there was such a thing as a Fed put, and combined with his assessment that the market reaction to the introduction of tariffs was reasonable, and that markets were functioning properly and in an orderly manner, despite the fact that we had a 10% swing in a major indice last week, suggests that he believes the markets are adapting to reality with the moves that have been made. And that, of course, was not good news for those bullish investors who had bought into this dip, and we saw the markets dip again. We also saw good support for safe havens, gold doing well in overnight trading. Bonds also rallied despite the fact that the Federal Reserve Chairman made it clear that the Fed was on hold at the moment and was not looking to move rates until it had a chance to assess the impact of tariffs around the globe. And so that support then fed into commodity markets, with oil rallying, surprisingly, on signs that supply might be hitting bottlenecks, and bans on Iranian oil and commitments from OPEC members that they would be looking at observing quotas or reducing quotas to make up for previous breaches. And all of those factors meant that oil and gas stocks were a feature in trading last night and are likely to find similar support today. We do have employment data out in Australia released later this morning. However, given that the markets are currently dominated by global influences, it's unlikely to move the needle. We're also expecting that volumes will be affected by the Easter break coming up, and this 4-day break for many investors in the region means that we could see a fairly intense morning trading session and volumes petering off as we head into the extended break. So once again, a clear warning that the turmoil that's been created by President Trump's tariffs is not over, and that large swing in sentiment overnight could mean that for the next few days at least, Australian shares and shares around the globe will be facing significant selling pressure.